Welcome to Renovate Ed, where we talk about all things home and renovation related. Hosted by Jennifer Goldsby, a renovation lending expert. Let's get renovated.
I was recently at a Builders Association meeting and a topic arose that I thought was quite telling in terms of the economy. There were several remodelers and vendors who were present who said that homeowners have been very slow to pay and or stiffing them on the final payment. I was really surprised to hear that. One remodeler said they had lost $54,000 in revenue. Another one said something along the lines of $40,000, and others piped up for smaller amounts. They started to float this idea of running some background checks on potential customers. Some were already doing some legwork online and via social media to see what kind of people they might be doing business with. Suffice it to say, I was extremely surprised by the conversation. They also talked about a trend they're beginning to see where homeowners habitually hire contractors with no intention of paying, and they verbally voiced this wonder: is there a way to do a lien search on a homeowner or a property prior to taking a job to see if there are outstanding mechanics liens or other unpaid liens or judgments? Boy, I just thought that was very, very telling. So it's in that vein that I offer this podcast episode on how contractors are paid when projects are being financed by a renovation mortgage. There are several different renovation mortgages that are out there. There are FHA options, conventional options, USDA options, VA options. So the type of loan that the homeowner is using is going to dictate how the contractor gets paid. I wish we could keep it real simple for you guys and say, this is how it is across the board. This is the draw process. But unfortunately, that is not the world in which we live. And what's that old saying? He who has the money makes the rules, something along those lines. We've got to deal with the agencies, and they have parameters that are in place, and we have to follow those parameters. So hopefully by the end of this episode, you will have a better understanding of how the draw process works for all of those renovation loans that we work with. Let's start with the FHA loans. There are two different types of FHA renovation mortgages. One of them is very simple, cut and dried 50-50. Contractor gets 50% of the bid amount, labor, and materials when that loan closes. The remainder of the funds, the other 50%, is going to be given to the contractor once the work has been completed. The homeowner signs off on that, and the work has been inspected. My company that I work with, Diamond Residential, we tend to disperse our draws within 5 to 7 business days. I can't speak for other companies, but I can offer what is normal for us. And I feel that that's a reasonable timeline. In years past, say 15 years ago or so, draws were taking 30, 60 days to get paid. The lender that was doing the bulk of renovation loans at that point is no longer doing them. So I don't hear that stuff on the street anymore. It's a small industry, and most of the lenders that I know that are playing in this sandbox, they do a pretty good job of dispersing those draws in a timely fashion. So that'll give you a little idea of how long it takes to get paid. Shouldn't take very long. The other FHA loan that's available is the bane of my existence. I suppose the good news is that it enables homeowners to get jobs done that otherwise could not have been done. However, I think I may have just lost a referral partner before I really even gained them, a fellow member of the Builders Association, because this loan program is so difficult to work with. It doesn't have anything to do with us as the lender. It has everything to do with HUD and their guidelines. And they demand that we use what's called a 203K consultant, as I'm going to refer to them as sort of a project manager on these particular loans. And the thing that makes it so difficult is that HUD requires lenders structure the loan off of the 203K consultant's budget. And they tell the 203K consultant that their budget is supposed to be an independent budget. They should not rely on contractors' bids. So here we have a third party. Maybe they're a home inspector by trade. Maybe they're a contractor by trade. They're creating this budget for this project. It's supposed to be independently done, not relying on the contractor's bid. In fact, if they do rely on the contractor's bid, I have seen consultants get letters from HUD threatening them, if we see another project that you bid that matches the contractor's bid exactly, we're going to pull your approval. So we're all kind of handcuffed to these guidelines that, in my opinion, don't make a lot of sense. Here we've got a loan. We're going to structure it on the 203K's budget. Maybe or maybe not, that budget is in line with the contractor's bid. And our numbers are built entirely around that budget. What makes that difficult is during the draw process. If you, the contractor, have your own system that you use to track the budget, those numbers are not going to match the consultant's numbers. And my numbers are going to match the consultant's numbers. It makes it really difficult to get through that draw process. I had one we just closed out where we very nearly overpaid the contractor a considerable amount of money in that final draw because the consultant's numbers were much higher than the contractor's numbers. Thankfully, that contractor spoke up and said, excuse me, this is going to be too much. You don't owe me this much. You owe me that much. And we were able to get that fixed. Honestly, it was the 203K consultant's job to make sure that that didn't happen. In this case, he didn't do that job, unfortunately. And so we did catch it, thankfully, with an honest contractor. But that's just one example of some disconnects in this process. The other thing I don't necessarily like about this program is that we are at the consultant's mercy in terms of draw inspections. And sometimes those can be done very slow. Maybe they're out of town. There's a consultant this week, loan hasn't closed yet, but he's leaving on Friday for 2 weeks vacation. If that loan was in draw admin, that means that that contractor and that homeowner, they would have to wait until that consultant returned from vacation and was able to inspect the work to request the draw. That's a big problem none of us want to deal with. Something else brought to my attention that I hadn't really given any thought about in past. In fact, this is the first contractor that ever had issue with this, but I'm really glad that they voiced the issue, is the final draw doesn't reference or give any evidence of the retainage. So let's talk a little bit about this draw process for this one FHA loan, this FHA renovation loan, the harder one. It's called an FHA 203K standard. It's very different than a lot of the other renovation loans. As I mentioned, we're rather at the mercy of the 203K consultant, but let's kind of walk you through what the disbursement process looks like or the draw process looks like on this particular loan. With most of the other renovation loans, we can get the contractor a little something up front at closing to get the job started. I love that. Contractors love that. Homeowners love it. I wish we could do it on this loan. We really can't. What we can do is we can give up to 50% of the materials cost for any special order items. We can pay those directly to the vendor, the supplier, the manufacturer. I can't give that money to the contractor, but if you have to order something, it's a large ticket item, and you need to put a deposit on that item, whether it's custom cabinetry or countertops or a furnace, we could put a deposit with the vendor, the manufacturer, the supplier for no more than 50% of those materials costs. If you, the contractor, or if the homeowner has paid for the materials 100%, before the job starts, then I can make you whole. We can pay 100% of those materials. Most of the time, we don't do initial disbursements on this particular loan type. I would say it's a very rare instance where we're giving 50% upfront to a supplier, or we're making a contractor whole because they've paid for materials out of pocket. Very rare occurrence. Typically what we see, nothing up front, and up to 5 draws are allowed. It's on the contractor to get the project started. They go out, they do some work. Maybe they do demo, they do some framing, they request a draw. Their work is inspected. The draw is paid. The draw is paid with a retainage, a 10% holdback. And that holdback, that retainage is applied to all of the progress draws. So if you're using all 5 draws that are allowed, then draw 1, 2, 3, 4 is paid at 90%. The final draw is paid at 100%. And when we pay out the final draw, we also pay out all of the retainage from the previous progress draws. This is a problem that was recently voiced to me. When you sign the final draw paperwork, it's just for that draw. So it's paid out at 100%, but just for that particular work that was inspected. It does not include any retainage. I see it's a problem. Now I see it's a problem. I hadn't really thought about it before because nobody ever questioned it before. We have a contract that the contractor signs that indicates they'll be paid their retainage in full with the final draw. It's just not evidenced in the final draw paperwork, and that could be very confusing to a contractor. I agree. Let's move on to some other renovation loans. If you're working with a homeowner who has secured conventional renovation financing, which happens to be one of my favorite types of loan programs to work with, although I will tell you any of these are great for a homeowner who needs to have some work done to their house and doesn't have the cash to pay for it. They all serve a purpose. Some are just more complicated than others. But let's say we're working with a conventional renovation loan. We can give a contractor up to 50% of materials costs once that loan closes. So at the closing table, title company can cut a check for up to 50% of the materials costs. Sometimes what will happen is a settlement agent, usually a title company, will give that check to the homeowner to pass along to the contractor when they see them. Usually, contractor and the borrower are going to see one another at the property, so that could happen. Other times, the check is mailed to the contractor. I have had some title companies that hold it and ask the contractor to come in and pick it up. That's my least favorite of all the options, but I have seen it happen. There is no maximum number of draws with the conventional renovation programs. The number of draws is determined by the contractor. I think that makes a lot of sense. If you're working on a large project, you're going to be working on it for 12 months. Maybe you need 6, 7, 8 draws or more. Maybe you want one every 30 days. Whatever it is, we can accommodate that. We typically shoot for one draw every 30 days, but not everybody needs that, so we get it. A lot of times a 10% holdback or that retainage will be applied to the progress draws, just like I described for that FHA loan. And the funds are going to be dispersed after the work has been completed and inspected by a third-party inspector. It could be a consultant of some sort. The inspector could be the appraiser. We've got a little bit of wiggle room on who we can hire to come out and inspect that work, which provides a great deal of flexibility. If you compare it to the FHA loans where we're held at the mercy of the 203K consultant. So I like the conventional loans for that reason and others. Same as with the FHA loan. The contractor is going to get paid the final draw in full at 100%, and they will also get all of the previously withheld 10% holdback. So we're going to make them whole in that final draw. If there are any outstanding change orders or contingency requests, we're going to pay those out as well. There are some energy loans out there, and the draw process is different from those. We very, very rarely work with the energy loans, so I'm not going to address those in this podcast episode, but I will provide some insight on the draw process for a couple other renovation loans. These are harder to find, the USDA loans and the VA loans. Most of the lenders that are out there, they're going to do the FHA 203K loans or the Fannie Mae Homestyle renovation or the Freddie Mac Choice renovation. Those are going to be the most popular, but there are still some lenders out there that can do USDA rehabilitation and repair loans or VA alteration and repair. So it's possible as a contractor you may run into that. When you do, on the USDA side, they rather mirrored the FHA renovation loan from years past, which has its pros and cons. So we'll talk about the simplest one first. If you're working on a minor project, no structural repairs are being done, it's quite possible you can get up to 50% of your bid amount, labor and materials dispersed at closing, and you'll get the rest of your 50%, the remainder of funds, once the work has been completed, the homeowner signs off that it's been done satisfactorily and the work has been inspected. So that mirrors that first loan that we talked about on the FHA side. USDA just kind of mimicked that program. And then they have another program that's really designed for larger projects or anything that includes some sort of structural work. And it's the same deal. We may be able to give you a materials draw in limited circumstances, lots of conditions. We might not be able to give that check to the contractor, unfortunately. You can have up to 5 draws. That 10% holdback or retainage is going to be applied to the progress draws. It's starting to sound real familiar, right? Those payments are made after the work has been inspected. And then finally, on the VA loan, you may find that the draw process varies lender to lender. No disbursements are allowed according to VA at closing. Maybe there are some lenders out there who will do it. I don't personally know of any, but I would coach you not to expect any disbursements at closing. Up to 4 draws are allowed. On those progress draws, a 10% holdback could be applied. Funds are going to be dispersed after the work has been completed and inspected by the VA appraiser. So that's one key difference. I know that was a lot to take in. It's an awful lot of material. It's hard to keep it all straight. I do this for a living, and I still have to go back and look at my notes when I'm asked about the draw process, particularly with programs we don't see used often like the USDA and VA loans. I've got to rely on my own notes for that. So we don't expect you to remember everything, but it just kind of gives you a little flavor for what you can expect during the process. There is a resource that you can use if you want to take a look at this in writing, kind of wrap your head around it. If you visit the renogal.com, under the homeowners and buyers section, there's a renovation loan comparison chart. And I've just broken down for you the draw process in that chart, gave you some details so that you have something that you could refer back to. Of course, any lender that you're working with ought to be giving you a flyer, an email, something in writing that indicates how you're going to get paid. It's really important for contractors to know how are they going to get paid, and lenders should be communicating that to you. But hopefully this is helpful as well, and I'd encourage you to share any comments you have. I don't really have the ability to control the draw process or change it, but love to hear those comments.
Now the legalese required to appease attorneys, compliance officers, and regulators. This podcast is hosted by Jennifer Goldsby, NMLS number 591226, Vice President, Renovation Lending. The topics discussed herein reflect my personal opinion. They do not represent the opinions of Diamond Residential Mortgage Corporation and its management. Discussions about loan programs in this podcast are not a commitment to make a loan. Programs, approvals, rates, fees, and loan terms are subject to loan applications, credit risk, appraisal evaluation, underwriting guidelines, and other lending or qualification criteria and limitations, and are subject to change without notice. Not all products are available in all states. Not all borrowers will qualify. Diamond Residential Mortgage Corporation, 582 Oakwood Avenue, Lake Forest, Illinois, 60045, 847-244-9301. NMLS number 186805. For licensing information, go to nmlsconsumeraccess.org/entity details.aspx/company/186805. Equal housing opportunity. Diamond Residential Mortgage Corporation is not affiliated with or acting on behalf of or at the direction of FHA, VA, USDA, Fannie Mae, Freddie Mac, or any governmental body or agency.